In this video, I discuss GameStop and also AMC. Why are some of these stocks up over 1700% this year already? I'm going to talk a little bit about short selling, the massive short squeeze that has taken place, and I'm also going to discuss potentially where the price could go from here. There are a few massive high profile investors involved at the moment, including Michael Burry. Even the great Elon Musk seems to be pumping up this stock. So let's get straight into it. First of all, I want to discuss the chart and you can see here a massive green candle, a monthly candle for the month of January 2021, and this is on GameStop. So GME is the ticker, and if you have a look back, GameStop has never ever been this high. Briefly in pre-market trading today, it actually topped over $500 US. So what's actually going on here? Well, GameStop basically just sells video games, and it was an old school brick and mortar store. Back in 2019, they closed around 800 or 900 stores. And much like Hertz last year, there are hedge funds who believe that companies like GameStop should eventually be going bust or bankrupt, and as such they short sell. So let me just show you briefly how that works. First of all, let's just get onto a daily chart. Now this is from kind of August 2019. Now let's imagine lots of people are buying this stock. So hedge funds buy into this stock, and they all have various kind of risk tolerances. So if the price moves back down, they have a stop loss, which could be a hard stop loss, which means it's automatically triggered, or it can be more like a soft stop loss, or a psychological stop loss, where they say, look, if the price gets below $4, then we will sell all of our position or half of our position. So on the way up, what happens is a stock has many of these stop loss orders. Now, if a stock is moving very, very quickly, almost parabolic, then what you tend to get is a crowding off the trade to the long side. And then if the price actually corrects, it can actually correct quite swiftly, quite rapidly, and very sharp, like you saw here in January 2020. And suddenly you get these gap downs as stops are being taken out. Now it's no different the opposite way. That's the best way to kind of think about it. Don't worry too much about whether you're borrowing money or lending money. All short selling really is somebody taking a position, for example, at these highs at around $6, and they're gambling or betting on the price of the stock going down. So they're almost like they're borrowing shares to do this, but it's the same scenario. So if the price goes down, say $1, then they've made a certain amount of money, but they will also have stop losses in case the position moves against them. As the price is moving down, that's great, but they might have stop losses higher up. So if the stock actually moves in the opposite direction, they'll be losing money, and they will be prepared to exit the trade higher up. So they might have a stop, for example, at the $7 level. So it's the same thing, almost in reverse. But where it gets very dangerous is if there's a lot of interest to the downside. So if there's a lot of short interest, then what happens is the trade then gets a little bit crowded. So very, very small moves of fluctuations can suddenly trigger many, many stops and a covering of these short positions. So let me show you a quick example. So this was Hertz back in February 2020 at around the $20 mark, and it dropped all the way down to a low in May of, well, it was around 36 cents. And rightly so, a lot of the professional investors, so the larger hedge funds, a lot of them were shorting Hertz, believing it to be on its way to going bankrupt because the fundamentals were completely shot. There is no reason why Hertz would be doing well at all during a pandemic, and with ongoing lockdowns, things should get even worse. But the trade got quite crowded, and then what happened then is there was a lot of buzz, if you remember, on Robinhood. People started suddenly pumping up the stock. Now what's not clear here is whether this is all just retail investors or there were some professionals backing this move up as well. But anyway, and the other thing to remember is when this actually happens, not only is there a lot of buying and a swift movement in price, but there's usually some sort of news as well. Even if it's very sketchy news, there's usually some sort of news that you can kind of pump the stock on. So I can't remember what it was for Hertz at the time, but it's probably some sort of kind of recovery scenario or narrative. Hertz able to perhaps write off some of its debt or get access to very cheap credit, etc., etc., and you know the rest of the story. And then what happened was, if we just move to the left here, you can see suddenly a short squeeze occurred where the stock moved rapidly for no reason at all, apart from just a technical kind of breakout here of short positions, and it moved all the way up back up to $6. Now that doesn't sound like much, but if you think about it in percentage terms, and let me just zoom in to show you how far it actually moved. So if we approximate at the lows there to that high, the top of the wick, over 1500% move in the price. That's why GameStop's been such massive news here at the moment across the various finance channels, and it's creating so much of a buzz. But where does it go from here? Because look what happened with Hertz. The price suddenly collapsed back down to around the $2 mark. And where do we sit with Hertz today? So if we scroll left further, we're still basically nowhere. So we're around the $2 mark. So it hasn't done anything else since then, because for obvious reasons, the fundamentals are really bad for Hertz, and they really should be going bankrupt, to be honest with you. I don't see how they could actually get out of this. Now, why is the SEC involved now with a company like GameStop? Let's just discuss that before we get onto the chart. So you can see here this Elon Musk post which just says GameStop. Now, since Elon Musk posted this, the price of GameStop pretty much doubled. All he said here was GameStop, but he doesn't need to say anything else. He's got 43 million followers. And notice, interestingly, he actually linked the Reddit forum. And this is what all of the fuss is about. This Reddit forum, which is called Wall Street Bets. And you can see here a post about GameStop Corporation. And this is where you're seeing posts like, keep buying the dips, keep buying GameStop, don't get scared off by the hedge funds. Now, the narrative here is it's the smaller retail investors taking on the hedge funds, which is kind of funny if you think about it, but in some way it's true, because it's not only the fact that there's a few people investing in GameStop, it's the fact that there's such a massive volume now. I think it was the #1 traded stock yesterday, even more than Tesla. And Tesla, I believe, was #2. And a couple of massive hedge funds had lost a lot of money having to cover their massive short positions on GameStop. You can see here reports that shares now today advanced more than 1,700% this year, fueling a rally in retail trading across the board and leading some short sellers to throw in the towel. And again, you're seeing a lot of these Reddit posts. It's more than just about money, it's about sending a message, so taking on the hedge funds. And this is where you have to be very, very careful, because this is definitely turning into a pump and dump, in my opinion. And here you can see yesterday, most traded, so $20 billion of volume yesterday. And this is equally worrying. I didn't know this, but Ryan Cohen, the former CEO of Chewy, he started buying GameStop stock last August. Third biggest shareholder now with 12.9% of stock. And he paid $76 million for his 9 million shares. And now his stake is, it says it's worth 1.3 billion, but it's probably a lot more than that. It's probably closer to $2 billion. That's how much his stake is worth. The two biggest hedge funds who were affected by this were Melvin Capital and Citron Capital. They closed their short positions, and they stated they closed 100% off their position. But what's interesting yesterday is that a lot of the big tech names, they were actually down, some of them significantly, about 2 or 3%. And a lot of people believe that the reason for that was because of this concern, not only with GameStop, but with other stocks that have heavy short selling pressure, that a lot of these hedge funds, they've now had to actually close out some of their big tech positions to kind of counter effect this massive loss. Now, one of the most famous short sellers is Michael Burry. You may remember him from the film The Big Short. He famously made a lot of money shorting the housing market during the housing bubble of 07 going into 08. A few months ago, he had disclosed that he was also shorting Tesla. But the interesting thing about GameStop is he's actually long GameStop. You see here, he's been a major beneficiary because he actually owns, well, his hedge fund owns 1.7 million shares, which have ballooned now in value, probably over that 592 million mark, probably more like 700 million US dollars and rising. So how big are GameStop now? Well, have a look here at the 5 largest Russell 2000 members. GameStop is actually second at 24.2 billion as of the last close. Very likely to go above that today and potentially become the largest member of the Russell 2000. So looking at GameStop, the next thing we need to determine is the short interest. So basically, how many shares are there short that are still outstanding at the moment and haven't been covered? Because these hedge funds are like, well, we've covered our positions, we've closed. Could we get even more of a short squeeze? Now, this is where it's tricky because I can't say really, Yahoo Finance here, how up to date these kind of numbers are in terms of shares short. And that's going to be important to determine whether we're still going to move up before we have a massive crash back down. And we will get a crash back down because all of this breakout is just basically technical. It's just short squeeze, pumping and dumping. And the scary part is, yes, there may be retail investors who are making a lot of money, which is fantastic, but I'm sure there are some massive investors as well getting in on this and then actually selling at the tops and then just leaving retail investors to kind of hold the outstanding shares at a loss. That's the worry here. So first thing I want to do is just click on a log chart so we can get more of an idea of what's going on here. Because the move is so parabolic, have to go into a log chart just to see what the corrections look like. And the problem here with GameStop is I've not got the out of hours trading here, so we're going to move much more than this today. But what I can see from here, from the March lows, which are all the way back at $2, by the way, just to give you an idea of how much we've moved since then, $2, even up to the $159 price, we were already up 6,000%, a ridiculous amount. You can see we had a clear impulse off the lows, sideways correction. We had another impulse up towards the end of last year, well, September, October, another period of correction, and now a final parabolic rise up. The only thing you can do when price gets this high is look left on the chart and just see if even a few years ago there were any important kind of trading levels. By the way, please like the video if you're enjoying the content. I'll have further regular updates on this, so please subscribe, turn on your notification bell, and you will hear about any updates I do. What you'll see here on Gamestock is, well, I mean, those levels were a lot lower, so $60. So if the price did crash back down, you may get some support between 58 and 65. So between that kind of level there may be some support. That was previous resistance. So can the price still get to 500, 600? I mean, it's already past 500 now. Absolutely, it can get higher. But I think there will be a point where all of the kind of short interest is taken care of, well, most of it anyway, and that's when we'll get a massive collapse, because this company fundamentally should not be trading at $800 or $900 per share. It's just not worth that. They've not made any massive improvements that I'm aware of in their kind of business case the past few months. The only one I've heard of is they've hired people onto the board that are more kind of e-commerce focused, which obviously makes sense. But that doesn't suddenly mean they're going to be taking on Amazon and other e-commerce companies selling video games suddenly at massive levels or doing any other type of innovation. And because this move has been so fast, I personally think we're going to get a crash. Well, we're on Friday trading today. Either we'll get a peak today or latest Monday, Tuesday next week, and then it's on the way down. Now, how far down it goes, I don't know, but because it's moved up so quickly, I wouldn't be surprised if a lot of people are cashing out. I personally, if I was in this, I'm not invested in GameStop. If I was, I'd be looking to definitely take some cash off the table, knowing that the reason the price has moved so much in just a few weeks is because it's a pump. Now, what annoyed me a little bit about all of this kind of hype with GameStop is that the SEC are now involved and Yellen's involved as well. And you can understand why. They need to kind of regulate these things and ensure there's not too much manipulation going on. But what's annoying about it is hedge funds have been manipulating various markets and assets for decades. But just be careful of jumping on the bandwagon of retail investors against hedge funds, because I don't really think that's what's going on. And when you look at these Reddit posts, you know, like this one, buy high, sell never. This is just asking for trouble. And the sad part is, yes, there's a couple of big hedge funds which lost a lot of money, but the people who will lose the most, ironically, is actually going to be the retail investors, the ones that are buying at $200, $300, $400 of GME and who are going to be stuck in that position when it crashes back down. Again, that's just my opinion. Let me know what you think in the comment section below. I'm going to do another update on this soon, and also we're going to have a look at AMC and a couple of other stocks that also had massive short interest, and funnily enough, hedge funds are racing to kind of cover their positions in other stocks where they have a massive short position, just in case something like this actually happens there as well. Thanks very much for listening.